Good evening, ladies and gentlemen. Thank you for attending. On the leaflet, I'm down as the speaker, and the good news is I'm not going to be doing the presentation. What we've decided to do tonight is to move away from the standard process of telling you how wonderful our projects are and what the future is, etc. You can read all about that on our webpage, and we've presented it before. So tonight we decided to do something slightly different, and it's Andrew's idea, whereby we show the value that has been created in the last 3 years when the company transferred or transformed itself from an exploration junior to a producing junior, and that the emphasis tonight is going to be on the value that has been created and the fact that this value creation is an ongoing process. We'll both be available for questions afterwards, and if you want to know what's going on in Zimbabwe, please don't ask me because nobody knows. But Andrew, if you could do the presentation, thank you.
Thank you, Roy. Good evening, everybody. Thank you for coming. I better start. Thank you very much. I no longer need to go through the disclaimer. What Roy said before and what he spoke to is quite relevant. What most mining companies do is talk about, what they've got, what's coming, how they're going to increase their share price. What we've decided to do is we've put out quite a lot of news in the last 4 to 6 weeks about Vast Resources and what we've done and where we're going. So we want to talk about what we've done as far as value creation is concerned. And of course talk to the assets and what we believe is going to be the future of the business. So I won't go through the slides one by one and talk to them. I'll just ad-lib if you don't mind. So Vast Resources is quite an interesting background for those of you who don't know. It started as an exploration company focused in Africa, mainly in Zimbabwe, back in 2006, 2007. We have assets in Zimbabwe still. We're a producer in Zimbabwe. We're producing around 20 kilos of gold a month. And we have milling about 20,000 tonnes a month. We're moving from the oxides. We've just built a sulphide plant, and we're approximately doubling production in the coming months or coming weeks, if I'm not mistaken, Roy. As far as Romania is concerned, we looked at Romania in 2012. The company went and looked at some historic assets of the Romanian government. They represented 75% of Romania's non-ferrous market. They were called Remin. We went in, we did the due diligence, and unfortunately they're still blocked in legislation, and which is meant to be changing in the spring of next year. And we decided to go after some of the assets that were historic mines operational. The first one, we acquired the assets in a place called Baita Plai, which is coming. Some of you are looking at me asking when's the license coming, which is imminent. And then, of course, we bought in 50.1% of Manaila in 2015, and earlier this year we bought the other 49.9%. What is quite interesting on this slide, and I will talk to this slide, and I shouldn't look at it because I've got one here, is that when we took over these assets and when we started transforming, as Roy said earlier, from an exploration company into a production company, is that we looked at the assets' value at the time. And if you look back in 2014 at Pickstone-Peerless, which is our major Zimbabwe asset, we owned 100% of it and had an evaluation of around $17.7 million. What happened was, it's very difficult to raise money for Zimbabwe, especially, and now is telling you the reasons why. We managed to find a local partner who is also very active in the mining sector as far as production is concerned, and we sold 50% of the asset at the time, which then went into production, and then earlier this year we sold another 25% of the company. Now, what that's actually done, quite funnily, is that if you look at the asset back in 2014, worth $17 million, not in production, where we owned 100%, whereas today we own 25%, even though we have a casting vote and control. We have now increased the value of that 25% to virtually double what our value was in 2014, without having to use our own money to develop the mine. So that's part of the value creation I'll be speaking to today. The same goes for Manaila. When we took over Manaila in 2015, it had a resource of just under 500,000 tonnes. It had an NPV, if I'm not mistaken, I'll move forward a little bit. Sorry, Roy, where is it? It had an NPV at the time of, sorry, I'm jumping the. We didn't put that in? Okay. Sorry, thank you, Roy. No, we had an NPV of around 8 million where we owned 50.1%. Whereas today, after 2 years of operation, bringing into production, and also increasing the JORC at the time from 500,000 tonnes to 2.6 million tonnes, we are now sitting on a much larger asset. We've also drilled out the extension, and we have previously disclosed that we're expecting somewhere between 9 and 15 million tonnes. Not too long ago, a couple of months ago, or a couple of weeks ago, Peter Rose from Brandon Hill put a valuation of about $17.5 million, where we now own 100%. We've invested less than $8 million in the acquisition and the development. It's a producing mine. It's breaking even. Some months it's making money, as we've disclosed, and we're now looking at extending it and building a bigger plant. So we've doubled the value of the mine in less than 2 years, and we've gone straight into operation. And a very interesting thing came up recently. We were looking and talking to some potential joint venture partners to come into the Romanian assets, and they were looking at coming in and investing directly into the company. And they were talking about price as far as the value compared to our share price at the time. And we had a very, very interesting debate. And the debate was as follows. If you want to go into Romania or any mine anywhere in the world today, if you go through the process of exploration, then construction, then going into production, you're looking at least a 5 to 7 year term before you actually get there. And the cost will be somewhere to double what the acquisition cost was at the time. So what we've done is we've short-circuited that as vast. We've gone in there and looked at historic mines, things that were producing, things that had potential, and gone in there and tried to add value to them and increase the value of the asset for the shareholders, which ultimately is our job, and to start producing a positive income. And with that, with the extension going to a potential 9 to 15 million tonnes, we're talking about one of the largest mines in Romania, well, the second largest mine in Romania, considering it's only the second mine in Romania, but it'll be the second largest mine of polymetallics in Romania. So this is where we're focused on at the moment, is creating value for shareholders and making sure that we bring to the market producing mines and can bring dividends back to the shareholders as fast as possible. That's the goal of the company at the moment. If you look carefully here, what we've achieved over the last 4 years, and the reason why I say 4 years is 4 years ago we had quite a large management change and a focus in the company. The company has grown substantially. We've managed to basically take the NPV of the company from around $17 million to $102 million, which is not reflected, of course, in our share price. And we've managed to start 2 mines in operation and prepare the 3rd mine for hopefully later this year before Christmas, as we've previously announced. We've taken Manaila, which is the main focus of the business at the moment, as it's the one in production. We took it from a non-performing mine, which was producing around 7,000 tonnes a month, milling 7,000 tonnes a month, and producing around 300-400 tonnes of copper concentrate a month, with a very, very low-grade copper, very high in zinc. We spent a lot of money developing the systems to be able to separate the zinc from the copper and create 2 revenue streams, and now we're working on the 3rd revenue stream, which is a pyrite concentrate high in gold. I've got to be careful not to say a gold concentrate because the Romanians don't like us using the word gold. So in our last quarterly production report, you'll see that we've managed to take up, here we go, tonnes mined by 46%. We've taken the concentrate produced up to 31%. Also, you'll see at the last quarterly, we increased Pickstone-Peerless up by 16%, and we're continuing that growth path at a rapid rate at the moment. Sorry, I have to check the time. I've been told I'm not allowed to go over the 20 minutes. Where we are at the moment is the last 20 months in Vast's history have been a strategic play. That means that we've been looking, as I said before, about creating value for the investors. What people don't often realise is that when you go from an exploration company into a mining company, there are a lot of changes. You have to change your staffing levels because you're focused on exploration, therefore your geologists change. You have to talk about technical implementation, and you have to try and build a new infrastructure for the company. What we've managed to do in that time is to take Manaila, for example, from a non-performing asset from who we bought it from, acquire 100%, and grow it into a viable business. And the thing that's quite interesting about Manaila, and one of the things that we're focusing on at the moment, is that although it's not, let's say, I'm trying to think of the right word, the infrastructure at the moment is not conducive for a polymetallic mine. At the moment, the mine is sitting up on a mountaintop. The flotation plant is sitting down the bottom, 19 kilometres away. And then again, another 17 kilometres away is our tailings facility. That constitutes 25% of our production costs. So if you take out that 25% cost and you put it to where we are today, which is a break even and above in most months, and you add that back to building a new facility, which is what we're in the process of doing now with the new JORC, that means that you'll go straight to 25% profit at the, straight away without doing any other improvements. That's not taking into consideration the increase in resource and the decrease in and the increase in productivity due to having new facilities, because we're actually working with 1970s, 1980s technology. So it's been a very, very difficult period for the company. However, as you can see, the company has now taken it to the next level, and we're now sitting as a production company while looking at other assets in Romania as well. We've also gone to the market and explained that we've been looking at other assets in Romania. We've also in the process now of, we've acquired another 70 square kilometre site, which constitutes 2 licenses, which is the Zagra perimeters, which is called Piciorul Zimbru, and Magura Negra, and that actually means, I think, the buffalo's leg and the small black mound. And in those two, the history of that was it used to belong to that Remin asset. Now, in those assets, they spent almost 20 years exploring the area, which is quite interesting, because the way they used to do things in Romania, unlike the JORC resource of today, is, and I explained it, I think, to the gentleman from Mariana earlier, is they didn't just throw a few holes in and have a look at the resource. They would actually create tunnels. They up to 10, 15, 20 kilometres of tunnelling and drill straight into the ore body. So all of that history that exists in Romania, we're now acquiring as we acquire these licenses. So when we take on a new asset or a new lease or a new license, as we like to call it in Romania, it comes with the historical data. And if you look at this new Zagra perimeter that we're talking about, it is 70 square kilometres, and at the time, in 1989, when they released a resource publicly, it was 3 billion tonnes of ore. That would make it the largest copper mine in Europe. And at the time, economically viable, they'd said, and take into account the copper prices back in those days, and the gold and the silver prices, that 300 million tonnes was viable. We're currently in the process of doing exactly what we did in Manaila and what we did in Baita. We've started the soil sampling and the rock sampling, and hopefully we'll start the drilling process in the spring of next year. So what Vast Resources has done is created value for its shareholders. Unfortunately, it's still not reflected in the share price. I think we're one of the very few junior miners on the market today that's done the transition from exploration. There's another one here today, so which is quite nice. That's taken us from a exploration company into a mining company, and then we want to grow into a mid-tier mining company. And we're very fortunate that we're in 2 jurisdictions where assets are reasonably inexpensive, where we're lucky to have in-house expertise, as they call it in Romanian, of the local knowledge, which is something that's very difficult in Romania and also in Zimbabwe, and to create value for shareholders. And now, that may sound very simple, but when you take into consideration that currently in Romania, we are the only private mining company operational in Romania in non-ferrous. There are a few people that have explored, there are a few people who have now obtained licenses, but nobody is actually in production. And that really is a result of the last 5 years' work in Romania, and building a team of locals, is learning to understand the local culture and learning to work within the limits of the law. And that's given us a very, very unique opportunity, because fortunately for us, there is still the old system of access to security, which doesn't allow people to be able to see the geological reserves of Romania. So we're very fortunate that we've got the in-house team that allows us to do that, which gives us the first mover advantage in the country. So we plan on taking that to the next step. We plan on going back to the historic assets of Remin and looking at other assets potentially in Romania. And this is all part of the value creation. So essentially what we're trying to say tonight is that we started in 2007 as an exploration, or 2006 as an exploration company. In 2014, the management changed with the focus on building a developing junior mining company. From there, we've taken the taken advantage of being first mover in Romania and also understanding Zimbabwe through our local knowledge, and applying the same mindset and the same business principles in both jurisdictions, where we can get access to affordable assets that are cheap to get into production and to add value to them. And in doing so, what we've done is we've taken a company with an NPV of about 17 million to 102 million in less than 4 years. Sorry, in less than 3 years. And that is the goal of the company, is to create value for shareholders and to continue to do so. And this is something that unfortunately doesn't get reflected in AIM market very often. We have a lot of speculation in the market. I mean, I used to be a trader, so I can appreciate that most investors here are looking at AIM as a place to make multiples on their money, which is a high risk, high reward category. And I perfectly understand. But I think ourselves and one or two others, and one of them here tonight, are one of the very few companies that's managed to take that transformation and add value and create value for shareholders. And the goal of the company is to continue doing that with all of the new acquisitions we have moving forward, and to focus on what we've created today, and to also take us to the next level of a mid-tier mining company. And I know that sounds very simplistic, but we've managed to achieve that 5 times value in a very short period of time. Once that gets realised, as far as the market's concerned, where we get that averaging of market value or NPV to share price, then we can take it to the next level and continue it further. And that is the goal of VAST in the short term, is to create a mid-tier mining company. And we believe that within the next 3 years, that Romania is a strategic target for us, and we'll continue to explore, or it's not actually explore, verify existing assets and move into production across the portfolio of the Romanian mineralised belt in the Carpathian Mountains. And we're quite happy to say that we have that first mover advantage. A lot of you are always wondering about the thing that most people worry about with finance as far as junior miners are concerned. We're very fortunate that in the last 6 weeks to 8 weeks, that due to the successes of both the jurisdictions in Zimbabwe and in Romania, we've been approached by some of the largest companies, we believe, in the world in the commodities sector, to sit there and apply an offtake agreement for moving forward on our current production and future production. But rather than do a normal offtake agreement of pre-selling, we're talking about debt finance at very reasonable interest rates. And we're in the process now. We've announced it not so long ago that we're in the due diligence process with several of them, and we hope to be able to release that by Christmas, because that's when our current offtake agreement expires. So we're not a company that's looking at searching for new cash. We're looking to try and broaden our investor base, which I think is the most important thing for a company to grow. Whereas most AIM companies are going out there trying to chase $1 for a raising or for exploration. We're sitting here trying to tell our story. I think that's the most important thing, and to create a new general investor base for the company, and emphasis on the value creation for investment. Sorry. I hope I haven't spoken at all to the slides, so my sincere apologies. I think a copy of the presentation will be available outside on completion. So I think I've finished for the moment. If there are any questions,
Any questions?
Roy, would you like to come up in case there are any questions regarding Zimbabwe?
Gentleman just down here.
Very interesting presentation. Just one thing, how many brokers do you have at the moment on your book? Is it just Brandon Hill?
Just Brandon Hill at the moment, yes.
What?
No, two. We've got Peter House Securities,
okay,
and Brandon Hill at the moment, yeah.
Right, and what discount rate do they use for your NPV calculations, for their NPV calculations?
So Brandon Hill, the analysis they did, actually it was a 12% NPV discount.
Okay.
12%,
That's pretty fair.
which is overdone. It shouldn't be 12.
No, 10 would be normal. Anyhow, okay, thanks for that.
More questions? Oh, that was easy. Move the microphone.
Could you tell, you mentioned that Zimbabwe and Romania were both cheap jurisdictions. I can understand why Zimbabwe is, for obvious reasons, but why does Romania offer such good value for purchasing assets?
What happened was post-1989 revolution, all of the other countries in the region decided to open up their books and disclose their geological reserves. Romania is still sitting, well, fortunately for us, but unfortunately for others, as all geological reserves are considered Secret Service documentation and part of national security. We are fortunate enough that I come from a Romanian background and I've worked within the industry in Romania for Secret Service clearances, as well as the staff that we've handpicked also came from the mining sector in Romania, and it's put us in a unique position to be able to access that data. So it's normally what happens now is you have to acquire the asset to be able to look at the data. There are limited access availabilities in data rooms if the government was tendering off sites in the past or claims in the past, but that access is limited and you have to pay heavily to view it. So, for example, if you want to look at 10 years worth of data, you're paying almost €1,000 per page to look at it. Not to print it, just to look at it. And you can't take a copy and it can't leave the country. You actually can't leave the data room.
So what sort of discount would you get for a Romanian mine compared to, say, a German mine?
We actually haven't looked at it in that perspective, but if you take Manaila as a prime example, with the extension of Kalibaba, 15 million tonnes effectively, or 9 to 15 million tonnes of resource in copper, lead, zinc, gold and silver, and our all-in cost to date is sub $8 million, including acquisition and capital costs. I think you can put that into a reasonable perspective. I mean, it's been discounted here because we haven't finalised the reserve. It's only inferred at the moment. Or, sorry, it's measured, not correct? It's measured resource, the 9 million, right?
No, it's...
No, 2.6 is measured, sorry. And the other, sorry, 2.6 is
I think one of the...
And 9 million is inferred. So if you take that into consideration as an all-in cost of sub $8 million, I think that you could apply, I mean, if you look at the NPV of that over a 25-year life of mine, that's somewhere probably around the $50-60 million just for the acquisition costs. Then you're talking investment costs. You can't even put a price on the equipment that we bought. The equipment to replacement costs would be higher than that. So I would say it's at least a 75 to 90% discount.
Thank you.
My pleasure.
More questions, anybody? Gentleman just here.
In your opinion, what are the key factors that you must attain for the market to narrow down the discount of its valuation of yourselves to your NPV?
I think that AIM is quite, well, it's quite usual for AIM to look at blue sky. We all know that. We all know the buy on the rumour, sell on the fact. I think for a production company to have the actual value, I think we need to get into that profit centre and start to look at dividend distribution, and then you attract that different sort of investor base that's looking for a trailing income and investor income. But you know, we're in a very unusual position where we're in production, we're growing, we're adding value, but we're also sitting developing as well. So I think a blend of future projects for the speculator and current dividends and profits, I think, was what it's going to take us to that NPV value being on par with our current market cap.
I think also when you're generating cash.
Yes.
Cash is king. And, you know, just looking at profit is very misleading because as an accountant, I will make the profit whatever you want it to be. The real factor is you've got to be generating cash, paying your bills and generating cash in order to afford the capital development. And when we can demonstrate to the market that we are generating cash, the market will appreciate what we're doing.
Any more questions, anybody? Oh, gentleman at the very back.
When do you expect that to be?
Unfortunately, we've got our nomad here, so we're not allowed to make those sort of predictions. We're working as hard as we can to get cash positive as soon as possible, across the board.
And the licenses on BP.
Yes. You missed the beginning. Imminent.
Sorry. I know it said imminent, but has the joint application gone through, or?
No, I mean, as it was declared, I think on the 16th or 18th of October, that the legal term under any ministry or any government body is 30 days. That's 30 days of working days plus public holidays. Now, they have indicated to us, and it even says so in the letter, that they're trying to do it sooner. So, I mean, that's all I can announce, because not only is our nomad here, I'll get my knuckles whipped by everybody else. But it is on track, is what I can say. It's within the term, as they advised me from the ministry today.
Thank you very much, both of you. Thank
you.
Thank you.